Dr. Arvind Panagariya, former Vice Chairman of the NITI Aayog and of course now Professor of Economics at Columbia University, joins in through a Skype connection from New York. Dr. Panagariya, good evening. Thank you so much, sir, for taking time out for us. Let's get straight into our discussion. Growth for FY19, the survey has pegged at 7 to 7.5%. You know, your successor was on the channel and he says it's a very sort of conservative estimate. What are your thoughts? Is 7 to 7.5% doable? And if yes, what will get us there?
Yeah, no, I think 7.5 certainly is doable. We would land somewhere between the CSO estimate and the economic survey estimate for the current fiscal year. But another percentage point I'm certain will add in the following year. I think a lot of the reforms are already in place. I personally have the view that, you know, the impact of some of the biggest reforms that the present government has done has not yet been felt. In fact, I mean, if anything, because of the transitional issues, the GST has had somewhat of perhaps 0.5% or so of negative impact. So I think going forward, 18-19, 7.5% seems pretty realistic to me.
You know, the survey also says that a pause in fiscal consolidation cannot be ruled out. And at the same time, you know, the chief economic advisor is sort of warning of setting any ambitious deficit targets in an election year. Let me ask you, will the heavens fall if the government actually does miss the mark, you know, on the fiscal deficit front by about 20 to 30 basis points?
Well, I prefer, so if the question is about 17-18, I would still pitch for trying to reach that target. I think, you know, markets don't take kindly. And in this case, particularly the present government's record on fiscal consolidation has been spectacular. I think, you know, huge effort has been made in the last 3 to 4 years, bringing the fiscal deficit down from 4.5 now expected to be 3.2. So I would hope that the 17-18 will still meet the target. Now for 18-19, my own advice has been that, look, you know, yes, this is an election year, and therefore perhaps one needs to go a little easier. So we could stay with 3.2, which would be the equivalent of the pause, but I personally don't think that, you know, we should let this go beyond 3.2. If it reverses to 3.4 or 3.5, once again, I think the signal to the market ends up being a bit negative, and we have had fantastic international impact of fiscal consolidation, and the ratings increase that we saw very recently was in no small measure because of the credibility of the government to stick to its fiscal consolidation plan.
Okay, you know, as far as red flags go, the survey has said that persistently high crude prices might dampen our growth prospects, and the expectation is that crude will rise about 12% in FY19. How do you think the government can best manage this, given, you know, the political ramifications and deregulation?
Yeah, I mean, I think personally, I thought that the estimate that the chief economic advisor put out of, you know, something like 0.2 percentage point decline in the growth rate for every $10 increase in crude price, I think that's a little bit on the high side. And the measure that we need really is in the hands of the central bank, the Reserve Bank of India, that correspondingly, if we let the exchange rate depreciate a bit, I think that will give us a better handle on our exports. That's something anyway, independently, I've been arguing that, you know, our exports have suffered a little bit because the rupee has been appreciating in real terms. That's a point that the economic survey also makes. And I think, you know, unfortunately, the RBI is also caught up in this trilemma. That what should it let go of? You know, does it let go of the interest rate? Does it let go of the exchange rate? Does it let go of the inflation rate? So in a world where the financial capital mobility has been instituted, where now, you know, we are pretty open also on the capital account, which was not the case some years ago, this becomes an issue. And I think that is what the RBI has been struggling with.
Okay. You know, in the past, you've called the notion of jobless growth a little bit bogus. I remember you said that, I think, in June last year, at some sort of an event. Of course, the latest Ghosh and Ghosh jobs report to some extent debunks that theory. Today, you had the chief economic advisor also in his press conference say that jobless growth is exaggerated. But, I'm sure, sir, you'll agree with me. And the fact is that we haven't been able to create good quality jobs. Again, something that you had the CEA today also say that our men and women need good quality jobs. What can the government do to address that? And, do you think that perhaps that will be one of the key priority areas in the budget this time?
Taneia, you're doing Panagariya versus Panagariya here. Because, yes, I have actually said that the notion that there has not been employment growth is bogus, simply because, we grew for the first 3 years under Prime Minister Modi at 7.5%. That kind of growth cannot come purely from productivity growth or purely from capital or investment growth. In any case, our investment growth has been less than what it used to be. So employment has to be growing. But on the other hand, what you are saying about the wages and good jobs, that has been my pitch all along. That where we have done less well, and we really need to do much better, is creating jobs that pay well. A lot of the workers really are holding jobs that are well below their potential productivity level. And that is because the jobs that we are creating are probably are on the lower productivity side. We certainly are capable of creating jobs that will be higher productivity side. And I particularly pitched recently in one of the columns about, something like a garment industry, the clothing industry, where if we capture the export markets, now, the export market is about $465 billion. This is 2015 figures. Our share is only 18 billion. China was exporting in 2015 about 175 billion. I think this is a market we ought to capture, and this industry gives you jobs with something like 15,000 rupees per month if you are in the formal export-oriented units. And I think that is where the big action ought to be. So, garments is one example, but you've got footwear, you've got other light manufacturing, all kinds of consumer goods, from toys to umbrellas to utensils to cutlery to what have you, every daily item that we use in consumption, furniture, another major one. And then, of course, we got the services sectors, construction, retail, which could also create good jobs. So that good, prospects for us. All we need is a bit more on work on the policy front. Perhaps we will need to get to the labor laws ultimately. The economic survey this time seems to not talk much about labor laws, but I think that has to be a part of our reform agenda over the medium term. Higher education is another area which I hope, when I left NITI Aayog, I'd written a report. I hope the HRD ministry will implement that report. I'm quite hopeful. So I think overall, I see good prospects. Currently, I agree with you that, well-paid jobs we still need to create in much larger quantity.
Let me talk about something else, that seems to have the government worried, actually by the finance minister's own admission, and that is collections from the GST. I think the last GST council meeting that we had, the finance minister in his press conference did sort of allude to the fact that the revenue collection hasn't been up to the mark. Of course, the survey says that you've seen a 50% rise in indirect taxpayers thanks to the GST. But what is your own take, sir? By when do you think, the mop-up will sort of stabilize?
Predicting these things is a little bit difficult because the whole process is very complex and complicated, where the technology and those who handle the technology have to interact with those who handle the bureaucracy. And both of them are evolving over time. So I would not hazard a guess, but I have absolutely no doubt actually that once we clear these basic kind of growing pains of a new system. Now remember that excise tax system, for example, had been there for decades. What happens is that our expectations are such that we expect that any new system we put in place to become functional overnight. Certainly mistakes got made, which were avoidable mistakes, but that's, water under the bridge. But let's wait, maybe since, if you insist, I'd say, in about 6 to 8 months, we should see a fantastic turnaround. And actually, I think the GST will eventually yield much higher levels of taxes than has been the case in the past. And certainly most important thing really, Taneia, we ought to worry about is the efficiency effects. I mean, in the end, the whole purpose of GST is to make the entire country economically more efficient so that it gets reflected in higher growth rate. And that is something I truly expect will happen. Already, people who actually are in the trucking industry, for example, they tell me that the movement of the trucks has considerably speeded up, actually, because there are no more checkposts when they cross the state border. And that is a huge improvement in efficiency. So that's just one aspect of improved efficiency. Much more will happen.
So I don't want to take up too much of your time. So my last question really, the economic survey was printed in pink to, underline the importance of gender issues to the economy. And quite honestly, I thought that was a very nice touch. It really stood out for me. What stood out for you in today's economic survey?
Yeah, well, I totally agree with you that the pink color stands out. I see that you are wearing pink yourself today to celebrate the economic survey. I'll tell you what stands out in the economic survey, actually, which is a little distinguishing feature, because last 2 or 3 years, I think economic survey's character was a bit different. This year, it seems to have moved a little more towards the conventional kind of setup, not quite, the way it used to be before the current CEA. But this one certainly is different from his other economic surveys in the sense that, there were a lot of experimental kind of ideas that would come in the previous ones. Like the last one had the PARA, the Public Asset Reconstruction Company idea. It also had the Universal Basic Income idea. But those are not here in the current one. I think the current one takes a more conventional approach to the economic survey. So that I thought was a little different about the present economic survey.
All right, Dr. Panagariya, we'll leave it at that. Always a pleasure, sir, chatting with you. Thank you so much and have a great day. Thanks a lot.